LiteFinance, the world of financial freedom.
Hello, it's Monday, May the 2nd, and we are starting the market forecast. After weak GDP data from the US last week, which showed contraction in the biggest economy, this week we have another round of US events such as Fed rate decision and NFP on Friday. So maybe let's start with the calendar and then move on to the general overview. So the week might be a bit slower on Monday, more than usual since we have bank holiday in the UK. But besides that, the data for manufacturing PMIs will be published from the Germany, Eurozone and the US, so one of the key economies in terms of production. On Tuesday we have interest rate decision from the RBA, where the consensus agrees to a slight rate hike this time, which we've been talking about last time when we were awaiting the inflation data, which turned out to be higher than expected, and this is the effect of this. So later that day, unemployment change from Germany, Eurozone and New Zealand in the evening. Apart from that, manufacturing PMIs from the UK. Next, on Wednesday, we will get early retail sales from Australia, then services PMIs from Germany, Eurozone and the US, as well as non-manufacturing PMIs from the US. So the first hit on the week will be the FOMC rate decision, where we most likely see the 50 basis point rate hike. Later, of course, a press conference and a statement publication. But on that in a moment. On Thursday, PMIs from Great Britain, OPEC meeting, where we will get the decision from Cartel about the gradual monthly output increase. Later, BOE rate, Bank of England rate decision, where consensus also shows a rate hike by 25 basis points. Still on Thursday, initial jobless claims from the US. Last but not least, on Friday, NFPs with data from Canada about employment change and IV PMI. So as you can see, there is a lot of stuff that will happen during this week. So first of all, NFPs will be watched closely since last week preliminary GDP data were weak. Now all eyes will be on labor market data to digest the current economic conditions, whether the recession is knocking on the door or it was just a hiccup. As for the rate hike by Fed, the forecast is based on a couple of factors. First, the pricing of Fed funds futures shows that traders are pricing in probability more than 99% for an increase by 50 basis points. Second thing is simply Powell's last comments, where he stated that the Fed is committed to use their tools to bring the inflation to their 2% target and that it is appropriate to move a bit quicker. You know what I think about that? That it will not help. Any reasonable person knows that the rate hike will not miraculously produce more natural gas or oil. So yeah, we have to deal somehow with this narrative, since the market participants are fed with this agenda. So as for the price chart, we can see that the US dollar was gaining momentum, but it might turn out that we have already priced in the rate hike into the quotation. Since, as we talked about a minute ago, the market is more than 99% sure of it, then it might be the scenario that we will slowly bounce back up on Euro USD. So this resistance is a very strong one. Last time we were on lower levels than this. It was between 1999 and 2003. So you can imagine that if we broke down the support, we could go towards parity level of 1, because it could trigger a lot of orders from algo-traded funds and institutions. So as for other charts, oil went according to the plan with a very good precision. Right now I would expect a further decline in price. Last week we talked about the global slowdown in manufacturing. So if the data about inventories will be good and OPEC continues to raise the output, the price of black gold could go down. Last chart is Euro AUD, which we also discussed last week, I guess. So we have the continuation of the plan. We broke out of the downward moving channel, broke the resistance, already made a retest, and now we are heading towards the target on 1.5228. Hopefully, of course. So yeah, okay, that is all from my side for this video. Thank you for watching and I'll see you next time.